Vitale here at Vitale Wealth Management with this week's Gradient Investments weekly update for all the information gathered as of June 17th, 2024. Let's get into the weekend review. Markets were a mixed bag last week with significant differentiation among the U.S. indices. The NASDAQ index was up over 3% last week and is up 18% year to date as all centric names continued to perform well. This was also a tailwind for the S&P 500 last week, up 1.62%. The Dow Jones Index has less emphasis on the all-centric stocks and was down for the week, as were the U.S. small-cap stocks, which is the Russell 2000. Now, the international developed market stocks struggled last week, which is the EFA, which was down 2.62% on the recent political turmoil in France. So let's talk about the upcoming economic releases. The U.S. Federal Reserve Open Market Committee meeting, FOMC, is slated to meet this week. While investors are pricing in no action, it will be an important meeting based on commentary regarding the future trajectory of the economy and any directions on interest rates. Every time the Fed breathes, they go one step or another depending what they're doing. They already priced in cuts and they're not getting the cuts. So we're still doing good, all things being equal, but we're going to talk a little bit about the Magnificent Seven as we get into this. Market outlook, despite negative week last week, the market has been quite resilient and is still up over 11% year to date. Gradient believes the S&P 500 is following earnings, which have been also very resilient, and estimates for 2024 and 2025 have risen in the last 3 months. Now, valuation continues to be expensive, but believe valuation is a poor indicator for timing market changes, so we also remain relatively optimistic overall. Jobs are resilient, wages and growth is exceeding core inflation, so that's all positive for the market. So everybody's like, how much longer is this going to go? This is a good tailwind for continued consumer spending, which is a tailwind for the U.S. economy and corporate earnings. So let's talk about some recent activity. The Core Select portfolio sold Salesforce, CRM, and purchased Coca-Cola. The G40I sold Glencore PLC and purchased National Grid. So, like we talk about, every quarter they rebalance the portfolios if something's in favor or they take earnings and go back and forth. Let's also talk about some other stocks in the news. NVIDIA, which is owned in the Core Select and G33, continued to march higher and exceeded the $3 trillion in market cap last week. The company is also undertaking a 10-for-1 stock split, which happened last week. That will be enacted, so that has been enacted already this week. Then we got Becton Dickinson, which is owned in the G50, agreed to acquire Edward Life Sciences Critical Care Product Group for $4.2 billion. This critical care group is a global leader in advanced monitoring solutions for cardiovascular patients. Now let's talk a little bit about the Magnificent Seven for a minute, which is why everything's been going crazy. Everybody's saying, my gosh, Joe, the stock market's up 15, 20, 30%. It's going crazy. That's Amazon, NVIDIA, Meta, not all the stocks. So a few of them are responsible for 300 of them for the market index going up. Not all of them, that's why not everybody's seeing these big returns. If you're in our G50 portfolio, yeah, you're up year to date, but not 15 to 20%, more like 5 to 8%. And the reason is those are defensive stocks. Those are value stocks. Those are slow and steady win the race stocks. Those pay good dividends, right? But in our Core Select and G33, you're seeing some good growth strategies going, which those are going to be more volatile. You're going to see the nice ups and downs with that, which is a good piece to have in your portfolio. So that's it. That's it for this week's market commentary. Thank you so much for being part of the Vitale Wealth family. If you'd like to get a hold of us, please give us a call at 855-756-5700. Visit us at vitalewealth.com. God bless you. We look forward to seeing you again next week.